Good morning, everyone. Today is Thursday, November the 9th. My name's Anne-Marie Band, and this is the Moneyball Morning Report for the Benzinga Pro platform. We're going to look at the SPY today and start with the SPY. And we can see that we are not quite at the top of the channel, not quite at the top of the wicks from 4 weeks past, and that we're sitting in an area that could be old support, new resistance, or it could be an opening for a break higher. What is the path of least resistance? Well, we're going to go to the daily, and we're going to look at what the candlesticks are telling us. Are we seeing higher lows? Yes. Are we seeing higher highs? Yes. Therefore, the path of least resistance is to the north. So here are a couple of things we want to look at. The top wick is around 438.71. that we can see on our daily formations. And then we're going to see this area right here, 443. That's going to be next on the list in my mind because we are moving up this candlestick formation. So buy the dip, okay? So we've been in a buy the dip formation for a while. And so the newest buy the dip area looks to be a little bit near 436.40. If I were really going to hold on tight to candlestick bodies in terms of their strength, I would say it's really 436. So my thought is this. Pre-market, we've seen a lot of upside action. We've got jobless claims coming up in just a few moments. We've got Powell speaking at 2 p.m. today, and mostly everything he's saying has been pretty dovish, okay? So here's my thought. My thought is watch for the cycle events. People are going to try and sell the top here because there is an undercurrent that says, hey, we got to stop heading up. But that's why this is happening. People are saying, hey, we got to stop heading up. They sell the new high, and then as it comes in and makes a higher low, they go, oh, crud, I got to get out of here. Or some other more fanciful expletive they might choose. Okay, so that's really what's happening. And this undercurrent of higher lows tells us, listen, we got to buy the dip. We are getting to the top of this Keltner band. Volume is drifting down the further up we move. Not that I spend a ton of time looking here. You guys know that I don't. But selling volume was still very dramatic to the upside, and we're still in this flag pattern. There are a lot of people that are saying, no, listen, this is the bottom. I missed it over here. I definitely want to get up in the next swing. And that could really push us higher. So we do not want to think about shorting right now unless you are a savage scalper. Okay? And then you can think about that. And guess what? The moment you start making higher lows, you got to get out of Dodge. That's just the way it goes. For those of us that are not Americans and we go, get out of Dodge, don't worry about it. It just means get out of the trade. All right, levels to watch. On the floor, 436. We break that, step to the side, watch for it to recapture, make higher lows on the base of that, and then get in and run up. Okay? Easy is, easy does. If we break and we do not recover, and you're looking for long, which seems to be the most likely thing to do, unless you're scalping, then you wait for 434 or the pre-market low, which is somewhere around 434.90, okay? 435, pretty important number. Below there, the bounces will be sell zones and we'll come back into the heavy congestion. My thought is, even if we break out, we're going to collapse into heavy congestion. That's just the nature of the ebb and flow of market motion. All right, let's look at the ES and do some comparative levels. I believe we've got a 4,400 sticky zone in the option chains, but to me, it looks like this is the next area, 44.20 to 44.30. Okay, those are the wicks right around here. What's the pressure event? Upward, 2 weeks down, 2 weeks straight back up. Okay, very big reflexive candlesticks. That's what we really have been seeing, since the summer began. 3 savage weeks down, several weeks up, and then savage down. So these are really expanding areas. Are we above the high of yesterday? Well, we tested it. We're now battling at that edge right now. Do you want to short it? Only if you're scalping. If you scalp it and then you go, all right, let me see if it can come into 44.42, that's great. But listen, you are against the trend if you're trying to short. So go with the trend. It's much easier to paddle downriver than paddle upriver, okay? Don't travel against the trend. It's going to make trading very difficult, and you're going to make pennies when you could be making dollars. So be patient and wait for these edges to come in. Where is the pre-market low? I don't know, it looks like 43.90-ish. Let's see what that number is. Yeah, 43.90. That's going to be the number that we look at that says, hey, if it comes in there and it begins to hold, you go to the tiny time frames, you watch it pull in, then you take the road to the north, you're in great shape for either sideways upswing or a break to a new high, all right? As we can see, though the wicks have been deep, they have been bought. And so you want to watch for those edges. Candlestick body formations tell us 43.78, 43.75, something like that. And when you're here, if you're long, folks, listen, this is not a market that moves savagely upside and keeps going without some measure of pullback. So if you're intraday trading, take some profit and raise the stop. All right, those are the levels we're watching for. Let's look at the Qs. Qs have been moving savagely outside of the flag pattern. Now, what normally happens in a break of a flag is that we break the flag and then retrace to the top of the flag. So this is what I have noticed, of course. That's a heuristic, my own personal observation. I haven't tested it over millions and millions of observations, but this is what I normally see in a flag pattern. It will break and then pull back either to the edge, if it's a strong move to the upside, or within the pattern, if it's a weaker move to the upside, and then try it again. So this is what we're looking for. Is it going to be weak? Is it going to be strong? I do not know, but here's what I do know. I know that this is bullish pressure. Yesterday was a very strange doji. Very, very strange doji. However, we are above the close of the prior day, and we're above the close of the day before that. So buyers are still engaged. Here's the thing. We clearly have sellers. This is a top space, so you do not want to chase it to the long side until it breaks, exhausts, and holds the floor at 373. If it cannot do that, it's going to continue because of this doji. It's saying there's a settling and an arguing of price. We got to pay attention to that. All right? That's very, very important in my mind because it shows indecision or a thought that the traders are saying, you know what, maybe we just ought to hang out here for a little bit, see what happens next. All right? Are we at the top? Could this be a topping formation? Yes. How do we know it's a topping formation? When it starts to roll over. Hence, what we do not want to do is take a position up here and then hold it if it breaks north. Why? Because it could simply go further and then we'll be upside down. Trade with the trend. The trend says, listen, dips are buying zones, and so we look for them. I like heavy congestion that resolves, and so 15,300 looks like a great number to me, right? To say, okay, eyeballs right here. If I get 15,300 and I hold above that zone, I'm going to buy that. Hold above the zone, it means you collapse down into a tight time frame. You say, am I making higher lows? You look at the lowest low. That becomes your risk event, and then you're off to the races once more. All right? Are we likely to move to the north? Yes, but we spent 3 days here, and that means the traders are still arguing about where to go next. Very likely, look at what the monthly is saying to us. High, lower high, lower high, lower high. Are we going to break the pattern here? If we break the pattern, then we expect these higher areas to come into the fore. All right? Other than that, nothing. Okay. Been talking a lot. This is my last one. Been talking a lot about oil. A lot of people are thinking, hey, you know, oil's got it. Listen, This, first of all, oils in contango. And a long time ago, when I first started learning about what contango actually means, because prices are stronger in the future, it's actually bearish in the present, okay? And I didn't realize that when I was studying a long time ago, but I do know from my price patterns that I expect this to be a bearish pattern, right? I expect it to be bearish. Where am I looking? Pit stop, 73, but honest to goodness, I think 70 is the next line in the sand, and potentially 68. Okay? That's really what I'm looking for. Every single bounce is a sell zone. Here's the danger zone. We are sitting at the bottom of a Keltner channel, and we are moving south with that Keltner channel, but we have a higher low this morning. So this is a natural bounce pattern that sends us up into the ribbon, which I love. Trend-spider ribbons are fantastic. And then we see what's going on. But right here is a little bit of a danger zone. You don't want to buy and hold this because every single time we've come into this ribbon, it's failed. Ideal sell zones were at the breakdown here at about that 82 area. Now it's a space of trimming the short, watching for another reflexive bounce that fails again. All right, this is the area down at 71 to 70 I'm potentially looking at. I don't think it goes to 65, but, you know, none of us really know where it's going to go. And I think this is a warning shot across the bow for a lot of different things, okay? Commodities are absolutely getting slaughtered right now. Okay, take care, everybody, and I'll see you on the platforms later today.